This is our update for the week of December 8th. Fundstrat Granny Shots is 3 ETFs. Let me give you the particulars of these. The large cap Granny Shots GRNY has total assets of 3.86 billion. GRNJ, which is Fundstrat's small and mid cap ETF, has 123 million of assets. And GRNI, which is the income-oriented large cap Granny, has $31 million of assets.
Tom Lee has unveiled one of the most fascinating market forecasts for the remainder of 2025, built around what he calls the 10 best days principle. Backed by market data dating as far back as 1928, this strategy reveals a powerful reality. Most long-term market gains don't happen gradually. They occur in just a handful of explosive trading days. Missing those key moments can dramatically change long-term returns. Right now, markets are sitting at a critical turning point. Investors are closely watching the Federal Reserve as expectations grow around a potential 25 basis point rate cut. Historical patterns suggest that moments like this often act as powerful catalysts, triggering major rallies across both traditional markets and digital assets. If history repeats itself, the stock market and the crypto market could be positioned for strong momentum as we move toward 2026. This isn't about hype or guesswork. It's about understanding how liquidity, policy decisions, and investor psychology align to create massive market shifts. Tom Lee's insights offer a framework for recognizing these opportunities before they become obvious to everyone else. And that's exactly what we're going to break down. What this data means, why timing matters, and how smart investors are preparing for what could be the next major market phase. Let's get more insights from Tom Lee.
For the past week, performance is as follows. GRNY gained 0.89 compared to a 0.35 for the S&P 500, or 54 basis points of relative outperformance. GRNJ gained 2.35% compared to 0.75% for the Russell 2500, or 157 basis of outperformance. And GRNI, gained 1% compared to 0.35% for the benchmark, or 48 basis points of outperformance. The following is the year-to-date monthly relative return. GRNY is up 26% for the year, 18% for the S&P 500, or 776 basis points of outperformance. GRNJ is up 9.22% compared to 6.6% for the benchmark. That's 254 basis points of outperformance. And GRNI gained 3.2% compared to 3% for the S&P 500, or 14 basis points of outperformance. So let me start with some macro. And I want to emphasize something that we've talked about at Fundstrat in the past many times, which is called the 10 best days, or the rule of 10 best days. And to give you some context, I think it explains why people are bearish this year. In fact, if you're bearish this year, you are consensus. Currently, the bulls less bears, according to AAII, stand at minus 10.7. And if you look at the weekly reading for AAII all year, bears have dominated market sentiment all year. There have only been 12 weeks where investors have been positive. Now, why is that? I think it has to do with the fact that people have been trying to time the market. The rule of 10 best days states that the S&P makes most of its annual gains in just 10 days. And it means don't time the market. And this year was a really stark example. Since 1928, the S&P has returned 8% a year. Excluding the 10 best days, though, it's minus 13%. That means you missed out on 2,100 basis points if you didn't own the 10 best days in every year. Since 2016, this rule's also held. The S&P's returned 14%, but it's minus 9% if you don't have the 10 best days. That's 2,300 basis points a year. All of the gains basically in the market are made in 10 days. Let's just look at the last 3 years. In 2023, the S&P was up 24%, but excluding the 10 best days, it was up only 4%. In 2024, the S&P was up 23%. Excluding the 10 best days, it was up only 4%. And this year, the S&P is up 16%, but if you exclude the 10 best days, you're down 12%. Huge difference. So let's look at those 10 best days of every year. In total, the 10 best days in 2025 were particularly stark, 32%. So you really had to be involved in the 10 best days. But that top 10 day was April 9th, 2025, when the market was up 9.5%. So that was the tariff lows. If you missed that day, you've had a bad year. And excluding the 10 best days, the market's down 12% this year. Okay, so it's the tariff bear market that determined everything. Here's the single best day of 2025 right there, that big candle. And if you didn't own it, by the way, after that day, you also missed out on the best 6-month gain we've seen in more than a decade. Okay, hopefully that makes it clear that you need to own stocks and try not to time the market. Now, when we look at the week ahead, Wednesday is the big day because that's when the Fed makes its December rate decision. A 25 basis point cut is the base case. That number the odds have moved around a lot, but as you can see, Polymarket currently places the odds at 93%. And as for earnings, Broadcom and Costco on the large cap granny report on Thursday after the close, and AeroVironment reports on Tuesday after the close. That's a SMID granny. And let's go through the individual stock performance within the granny constituents. Okay, let's start with GRNY and GRNI. They have the same components. The top 5 performers were Cadence, Palantir, Tesla, GE Vernova, and Caterpillar. These are all AI related. The bottom 5 are Broadcom, GE, SoFi Technologies, Vistra, and Netflix. Okay, and Netflix was hurt because of the Warner Brothers acquisition. Okay, on the SMID side, the top 5 are UiPath, MongoDB, Samsara, Rocket Lab, and Shark Ninja. The bottom 5 are Sterling Infrastructure, SoFi, Riot Platforms, Talon Energy, and Pure Storage. And here are the themes. The best performing theme this week was millennials. And again, millennials, our super cycle there is that millennials are really in their prime income years. The second is the PMI recovery. Makes sense, especially if the Fed is cutting next week. And third is the global labor shortage, which drives AI. That's it for now. Thanks for listening, and I'll speak to you soon.